students, welcome back to my YouTube channel where I'm focusing on accountancy for grade 11 and grade 9. Alright, as promised, I would try and keep one class each on every Friday. Okay, on last class, if you remember, we had dealt with introduction to accounts, wherein I covered a topic like meaning and need of accounting, branches of accounting, accounting information and characteristics, objective of accounting, basic terms of accounting. Now this session I will begin with a little more elaboration on this accounting information, and then with that we will proceed with GAAP, that's generally accepted accounting principles or concepts. What are the concepts or principles accepted worldwide? Systems of accounting and basis of accounting, and with that we will complete our today's class with a smile on your face and wishing that everyone has understood the class easily and comfortably, right? So let me begin. Now I said today I will start with accounting information. You remember in the last class, one second, let me just open this for you. In the last class on accounting information, wherein we discussed the characteristics, we emphasized that accounting information provided should be relevant, adequate, reliable, and able to be understood and comparable for the decision making, effective decision making, because that's the core thing we are going to account is based on that, on decision making. Alright, so today I'm going to proceed further. Now, if I take my accounting information, all right. Here I will say for making accounting information meaningful to its users, such information should be reliable as well as comparable. Alright. Now, remember in last class I had explained you users. So my users would be both internal users as well as external. Remember I had drawn like this. If this is your organization, or everyone inside the organization, my management, my staff, my supervisor, HR, everyone pertains to internal user, whereas other outside who are associated with my company directly or indirectly, they are external users like government bodies, tax authorities, my bank, my investors, they are all external users, right? Now, what do you mean by comparable? This is something different. Comparable means it can be in two ways. One is I can compare my financial records with intercompany comparison, or I can do it with inter-period comparison. Alright? Now, intercompany comparison means if I am dealing in, for example, textile industry, I should be able to compare with another textile industry the financial positions. But if it's of the same, there's so many other factors like economic conditions should be same, my geographical area should be same. So intercompany comparisons can be done, and interperiod between, you know, that accounting, financial recording, financial statements are done yearly basis on the base of annually. Alright? So each year I should be able to compare whether I'm doing better or whether I still need some more improvement, right? So this both, let's say this both is possible only if only if only if the information provided is based on consistent accounting policies, principles, and practices. So here we are going to emphasize on accounting policies, principles, and practices. Principles are also called as concepts. Alright students, so this is what you have understood. Now I am going to move to the next subtopic. Here I have already covered up this accounting information which I wanted to explain, that for making accounting information meaningful to its users, such information should be reliable as well as comparable. Reliable we have done last time. Comparable means I should be able to compare the information what is provided to me with intercompany, two companies dealing with the having the same kind of setup, product, geographical location, etc., 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 which you will be learning slowly. And interperiod comparison. My today's comparison, today means this year's comparison if I make with last year, whether I have to improve, which area still needs improvement, so on and so forth. So this comparison can be possible only if the information provided is based on consistent accounting policies, principles, and practices. Right? So now I move to next one now. Just a second. I will get away with this paper because we have already done with this. Now, second point what I am going to discuss is GAAP, that is generally accepted accounting principles, or you can say concepts. Now what is GAAP? Generally accepted accounting principles. This is the principles or concepts which has been accepted by professionals to bring in uniformity in preparation and presentation of financial statements. Right? So, which is accepted by all over the world by all the professionals to bring in uniformity and in preparation and presentation of financial statements. So that how can you compare? I can compare this paper with another similar kind of paper. In the same way, there has to be uniformity in preparation and presentation of financial statement. Then only you will be able to compare intercompany, interperiod, so on and so forth. Now, the rules, which are the principles are also called as concepts, or also called as rules, conventions, postulates. You would have heard this name in your mathematics as well. Then assumptions, also modifying principles. Alright students, so now with this I have explained you what does it mean. Now I will go in detail that what are my accounting principles and concepts. So I will go in detail. So I move to the next one, my next page. So here I am going to explain to you what are my accepted accounting principles or concepts. Alright? So I will say principles or concepts which are generally accepted by throughout the world, by all the accountants, by business entities, by government bodies. Now, here I will just handle with the basic terms, the basic ones which we need to know. Now, the first one I would say business entity concept. Guys, you should be able to know this theory. You should know this theory to be able to solve your theoretical questions as well as when you move forward to do your practical problems, so that there is no ambiguity in the terms. Now, business entity concepts. What does it say? It assumes that it says business is run by a person, okay? It's a person, let's say it's a sole proprietor. Here I will say sole proprietor, or you can say partnership, partners, or it's a company. So they say this is business. Business is separate from the person who is running it. Alright? So person is different than all this. So I will say the person who is running is, we don't mix these two. So person comes here. Person or the people who started the business, they are different from the business. So it's different from its owners. These are two separate entities. We say it, they are two separate entities. Alright? Now I move to the next one. My next point is, first you have understood this basic, in the basic principles, business entity concept. Now I move to money measurement. In my money measurement concept, I have told you in my last class, accounts is everything to deal with money. Anything which you cannot transform or value in the form of money doesn't come in my accounting group. So it's only money. If any transaction which can be expressed in terms of money. For example, remember last time I gave you an example, purchase of machine worth rupees 10,000, right? But then if I say another example, recruitment of a manager. Now this I cannot put it in my books of account. This I have to make an entry, but for this no, because I cannot convert it in terms of money. Even though manager will be getting his salaries per month, that will go monthly basis. But when I recruit a manager, I don't write it in my books of accounts, right? That's a management policy. So that is why something which you can transform in terms of money can only be entered in my books of account. Now, the next is, this is, if you want, I can label it as number 1, then number 2. Now I move to the next one. So I think we are clear so far. I move to the next one. I label this as 5th page. Now, the next, my basic concept, my third one is going concern. Now, when I start a business, I don't start for a year or two. So I assume my business is for long term. And it is not a short duration, right? it's going to be for a long period. So it's operations, long-term business. It will go on. Maybe partners may change, or maybe sole proprietor. See, sole proprietorship, proprietorship. That is sole proprietorship, like small traders. It may convert into partnership, and it may convert into companies. But then I assume always we take it as a business as a going concern concept. It doesn't stop in short duration, right? Now next concept. Next is accounting period concept. And in my accounting period concept, how do I compare two financials? I have to, like how you have academic years, beginning in March, your academic year starts in, let's say, April, no, May, June, whenever it starts, because here it starts in April and it finishes in March, right? In between you have vacations. This is your academic year. Similarly, for my financial accounts, it's all in annual basis. Annual basis, unless and until it is for interim period. We don't talk about that now. Annual basis. Accounting period is, for example, Jan to December I take, or I take March to Feb, starting in March and completing in Feb, or I say April, starting in April, ending in March, 31st March. So the days are also important, 31st March, like that. So it is exact, so that on that day when the financial year closes, I can check my assets and liabilities, what I have in the company. That means how much company owns and how much company owes. Owns is its own, how much it belonging, how much belongs to the company, how much company has to pay back, or to outsiders, right? That's what we are, that's what it says, accounting period concept. Now we move to the next one. Number 5. Now we go to the next one. This says cost concept. This is very easy. All these are very easy. You just have to apply, understand it, and start using it. For example, if you go to buy something, just think about it. Is there money involved? Yes, it is a monetary concept. That's how it becomes very easy for you. The cost concept requires that all assets are recorded in books of accounts. That means cost concept requires that all assets are recorded at what price? At purchase price, at what you're buying, and not market value. For example, you would have bought a machine 3 years back for rupees 20,000. Now its market value may be more or less, because if it's it may be, let's say, 5,000, but I don't take this into consideration now. I will just start with this only and then keep on depreciating, which you will learn later. Forget about depreciation. So my recording is at the purchase price. What do I buy it at, right? This is what is the cost concept. Everything is money, monetary terms. And then after this we move to number 6 is dual aspect concept. Now dual aspect concept, that it says each transaction has two entries, a debit and a credit. A debit and a credit. I'll just give you an example for easy understanding. As I've been saying, bought machinery for rupees 10,000. So now what's coming in? Machinery is coming in. So I will debit. And what's going out? Cash. I'll credit. So debit and credit I'll explain you later. But you just have to think that two things are getting affected. Something which is coming in and something which is going out. Alright? So that is how it's taking, that each transaction has two aspects, not one, always. If there is one aspect, you have to think that something is wrong. So two accounts will be involved. Here two accounts is, one is machine is getting involved, the other is your cash is getting involved. Right guys? Now we move to the next one. Next one says revenue realization concept. Now, my revenue realization concept. It says the revenue for the business transaction. Shall I write it for you? Okay, revenue. Revenue means income, right? Whatever income the company generates. So whatever revenue generated shall be recorded only when it is realized. Right? So whenever you generate, not in anticipation that I may get and so I record, no. Whenever revenue which is generated, it's recorded only when it is realized. But the expenses, when it is expenses, if I have to take expenses, I will write even though it's going to happen. Even though if it's going to happen. For example, rent. Rent always you pay after the end of the month. Let's say rent of factory. You pay at the end of the month. So you are going to record it, right? So this is the revenue realization concept. Now then I move to the next one. Next is my matching concept. Now, my matching concept says that expenses incurred in accounting, expenses incurred during my accounting period should match with the revenues during the same period. So whatever expenses, because whatever expenses in company, whatever expenses you earn in your business, it should match with the revenue, with the income. It cannot be that you're expending something which is not related to your business, so it doesn't form part of it, right? So that is the matching concept. The matching concept thus states that whatever revenue you have earned during the accounting period, it has an expense pertaining. Alright guys, so we move to the next one. Next one says full disclosure. Disclosure concept. Now, my full disclosure concept says that since the accounts, my books of accounts is used by different users, internal and external, so it should be transparent. My books of accounts should be transparent, no bias, and it should be fair. It should give adequate information. So in this I can give you one example of if the company wants to take a bank loan, right, for enhancement of their business. So they have to provide their financial records. So your financial records should be transparent, it shouldn't be biased, it should be fair, it should provide adequate information, and it should be easy to be read. It should be easy to be understood. It should be easy to be understood. So this says full disclosure concept. Now with this we move to the next one. This is 8. Then I move to the next one. Consistency. I think this is 8. I'm sorry. This is 9. This is 10. Because in my earlier page, 5, 6, 7th I didn't write. 7, 8, 9, 10. Now this says the consistency concept. Now, my consistency concept says that I should maintain the same method for recording my financial transactions and also records. You can say statements as well, so that the intercompany or interperiod comparisons can be made. Again, we are coming back to intercompany and interperiod comparisons can be made. So if each year is consistent, it's easier for any business for comparison as well as submitting to bank for the banks, for the investors, for everyone for that matter. It's easier for all the users. So we move to the next one. Next one is number 11. Number 11 says conservatism concept. Now, what is conservatism concept? This actually deals with nothing else. You can say prudence concept. That the concept of prudence requires that profit should not be recorded unless it's realized, whereas all losses which may or may not occur should be recorded or taken into account. This is the prudence, because the business has to be prudent. If you keep some buffer for a loss, if it happens, you're able to chip in. But then if you don't keep buffer for the loss which may happen, then the company is going to be in problem, right? Then we next move to materiality concept. Now, materiality concept it says those items which are very, very small in nature, we shouldn't waste time on recording it. So, which are very small in nature. So, you don't have to, no need to bifurcate and record it. Example, I'll take example. For example, you buy stationery, the company buys stationery, okay? Now stationery has pens, pencils, then erasers, so on and so forth. So no need to record each and everything individually. You just have to say stationery and be with it. And we don't keep the stock. Stationery is always revenue, so it's not your asset because you're going to use it, right? So that's how it is dealt with. Now, the next is objectivity. Where should I? Okay. Next is objectivity concept. It says that whatever we are doing in the business, we should have a objective to it, right? We should not be no bias. This is the main thing. The aim of the company is to make profit. Aim of the company is to move ahead, and aim of the company is to be economically responsible. So it should not be biased. Its the main aim of the company is profit making, unless and until it is a charitable trust, right? Profit making. It should be socio-economic responsibility. And it should provide quality product. It shouldn't be biased, right? So this is what we end with the concepts. Okay guys? Again, I will just read all the concepts for your easy reference and easy understanding. My principal or basic concepts are business entity concepts, where the owner is different from the company. Money measurement concept, which says that each transaction has to be measured in terms of money. If we cannot measure in terms of money, we don't record it. Third, going concern concept. We always take business on a long-term basis. Next is accounting period concept. There are fixed periods. Each period it can be compared with the previous ones. So I explained you what do you mean by owns and owes. The company, what does it own at the end of the period and how much does it owe? It has to give to others. Cost concept. We take the value of the assets when at the purchase price, not market value. Dual aspect. Each transaction has two effects. Two accounts are affected, like here machine is affected and cash or bank. Revenue realization concept. That revenue is generated, it shall be recorded only when it is realized, not before it's realized. Then we have matching concept. Each expense incurred should match with the revenues it has generated. Full disclosure, that my financial statement should disclose everything clearly, transparent, it shouldn't be biased, it should be fair, adequate information, easy to be understood. And consistency concept, it should be consistent. Each year my financial statement should be consistent. I don't have to keep on changing the method. For easy reference for intercompany and interperiod comparisons. Conservative, prudence. Prudence is when I don't make profit, I don't record it before making profit. Whereas all the losses which may or may not arise, I have to record it. Materiality, smaller items, I don't have to record it individually, I will group it and record. And objectivity concept is I don't have to be biased. Now, with this, I'm done with my concepts. Now I move to systems of accounting. Now it's very short, maybe 5 more minutes I'll take and I can complete because it's very easy for you to understand. Systems of accounting. Systems of accounting. Just completing, guys, have patience because this will make your life very, very easy. Systems of accounting. Systems of accounting is done in 2 ways. Double entry system and single entry system. Okay? Double entry, as I told you, 2 accounts are 1 and 2. 2 accounts are affected. But whereas in single entry, only 1 account is affected. That's how it shows. Each debit has a corresponding credit. Each debit has a corresponding credit. But it's in single entry, this is not so. It maintains only mainly personal accounts and cash book. Only these things are maintained. And these are for very small traders, they do it. Those who work on daily basis, so they don't have to maintain in detail. Yeah, so but then this method is always preferred. So this we are done with system of accounting. We will be learning double entry system. This we will learn, but then most of my accounting throughout my year and next year and all is double entry system. With this I'm done with system of accounting. Now I move to basis of accounting. Basis of accounting. Okay. In my basis of accounting, there are two bases. How do I record? Either I deal in cash or I deal in accrual basis. Accrual, okay, cash is we buy and sell only in cash. And accrual is we can buy and sell on credit as well. So here is accrual. That means I purchase now, pay later. I sell now, receive later. So these are the two bases. And here, this is useful for the small businesses, small traders, or you can say businesses. This is for medium and large scale industries. Right, guys? So this is what I have covered here. In today's class, we are done with basis of accounting. Cash is for sole proprietorship, small traders. Accrual basis is, even he does, the sole proprietor also may be buying in bulk on credit. And then I sell on my credit. To whom I sell, they are called as my debtors because they have to pay, and from whom I purchase, they are called my creditors. Okay? So with this, I end my session, today's session, and let's hope that you have enjoyed this session. Please like, comment, share and subscribe if you have liked my classes. Anything, you can always contact me on my email, which is already given in my description. Alright, guys? See you next time with next chapter, next topic. So today I have covered accounting information, general concepts and principles, system of accounting and basis of accounting. Bye-bye. Good day. Take care.